Well, good Monday morning and welcome back for another episode of Monday Morning Market. As always, we're pleased to be joined by Jeff Peterson of Heartland Farm Partners as we discuss all things, well, you guessed it, the markets. In a moment, Jeff, we're going to be talking about another term to break down to help us better understand the futures market. But first, let's look ahead to this week and maybe first look back to last week. We saw some support in the commodity markets, particularly for soybeans. What are we looking at as we enter a new week? Are all eyes going to be on the WASI report?
Yeah, they really are. The WASI report's going to be a big one. As we take a look at that, I think the number they're really going to be focusing on is the ending stocks. I think everybody believes that we'll see a little bit of reduction in yield. The big unknown is what's going to happen to exports. And exports look like they're going to go up. The ending stock number, and this is according to the Dow Jones survey, there's lots of different surveys out there, is looking for 239 million bushels of ending stocks. That compares to 290 million, so that's down 51 million. The stocks are getting tight on the soybeans, Bryce.
Well, as we look at this week, over the weekend, we saw that President-elect Joe Biden is now giving some speeches. President Trump has not yet conceded, but it seems like the projection is that we'll have a new president come January 20th. What is that going to do? Particularly, you and I were discussing the Phase 1 agreement with China. How much is riding on a presidency there, and will we see China continue to buy corn and soybeans as we move forward?
Well, that's a great question, because one of the items, and it's probably no surprise to hear that they want to renegotiate the Phase 1 deal. What we don't know, though, is that within the Phase 1 deal, we're not sure how much really teeth there was if they weren't performing. And personally, I think, Bryce, a lot of what the purchases have been has been a real need that they've had. I don't think they were that concerned about trying to fulfill the Phase 1 trade agreement. However, if we take that into mind, they might try to play some games now to try to go ahead and get the market to walk back down. But, the market's really strong right now.
Have to also think that people are, like yourself are watching closely what's going on in South America. What are you seeing in terms of their crop right now?
It's really interesting. Mato Grosso, which would be their big soybean producing state, it looked like they were doing pretty well. And then I saw some stuff over the weekend that shows the western part of that area, actually some soybeans struggling. Some soybeans been planted 20 days and aren't up yet because it's too dry. So overall, I'd say we've got a dryness issue down there. I think longer term, the big concern is going to be Argentina, and Argentina does look like it's going to see some drier conditions still. So, they got to get planted. And just to kind of reinforce that, Bryce, last week, Buenos Aires Grain Exchange actually already, before the crop was planted, started reducing their soybean crop down there. So that's an area that we're going to have to watch really close.
Plenty of things to watch as we enter another new week, and that's just three of the factors. There's many of them ingrained in there. But as we continue this conversation, Jeff, I want to break down a commonly used term, and that's commitments of traders. It's a report that comes out weekly. Tell us about what's going on here.
You bet. With the Commitment of Trade report, abbreviated the COT report, it's put together by the CFTC, the Commodity Futures Trade Commission. In really simplest terms, it's a way to track basically the big money, the managed money, the speculative traders, what size of positions they have on. And it comes out every Friday, and when it comes out on Friday at 3 o'clock, it actually goes through the previous Tuesday. So that's when it's reported. And what there is that within that report, they're trying to determine what's the positions that people own or the positions that they've sold and are short. And so what we look at is we look at what's called the disaggregated report, and that gives us the most detail. And in particular, we look at it for the managed money. So that's basically funds that are just trying to make a profit out of the markets. And within that, then we look at both the futures and the option side. And when they report on that, what we can do is we can get a feel is that does the big money, are they buying, thinking the market's going to go higher, or are they selling, thinking the market's going to go lower? So we watch that report very close.
Knowing that report comes out a couple days after, since it's Tuesday data, how much influence do you put on that for the following week, or how do you use that data to make your choices?
Very great question. So what we always try to do is that, and it's harder now. It used to be easier when we had pit trade. When there was pit trade, we could keep track to closer, where companies could keep track of who is trading what. So what we always try to do is look at, okay, what were the numbers as of that Tuesday? And then we try to look at what do we think the funds did for buying and selling the rest of the week. So what we try to do is that as we come into Monday morning, we try to come up with an adjusted report to be able to give us a feel to go ahead and start out the week. Do we make all our decisions based off that report? No, we don't. But it's almost becoming a new one of those fundamentals that we put in so that we get a feel of what the supply and demand is of the future side.
Interesting information as always, Jeff. Appreciate your time here on the Monday Morning Markets Conversation. Have a great week and be sure to head over to our website, ruralradio.com, for the latest market news.